Okay. Welcome, everybody. It is gorilla time. Meme stock mania is happening, and we are here to talk about all the goings on in the market. My name is Michael Camo. I'm director of content for T3 Live, and I'm here with my arch nemesis Scott Redler, and we are going to talk about all
I
the
used to
fun.
be I used to be your favorite guy in the market. Now I'm your arch nemesis. What happened?
No, right now you're number two. So Sammy's number one. You're number two now because of all the trouble you're making. So
Oh shit. I'm sorry.
no,
All right.
we're just screwed around. Hi, everybody. We're letting everybody come on in. There's a couple hundred people so far. Looks like we should have another good crowd. Scott's going to be out tomorrow afternoon. So we're having our little usual Friday afternoon party on Thursday. So we're going to talk about the Blood in the Street account, of course. Everybody and their mother coming out of the woodwork with meme stocks going crazy. The big moves in the semis and the AI stocks, and what's next for Apple. So, Scott, how are you doing out there in the market?
I'm doing all right. I'm doing all right. It is Thursday, and I do have a beverage, so I'm going to crack it open with my crew from around the world. I do love my friends on Twitter. I love my friends at the 630 Club. I love my friends on the Alpha team. I love my friends in Brother All Access. I'm sharing a lot of love. Stock market at all-time highs. You know what? There's a lot to celebrate, considering that everyone in the world usually talks about all the risks of not being in being in the stock market. We try and go over the risks of not being in the stock market. So this way, if you have some long-term plans, you could save for retirement, save for college, and maybe make a living if you have a process and a plan, and don't just try and throw what against the wall.
Okay, guys, let us know in the chat. Did you trade AMC or GameStop this week? Let us know in the chat. So, Scott, I noticed something definitely changed in the past week or so because we saw everybody and their mothers coming out of the woodwork. Dave Portnoy's out there. Roaring Kitty came back. Zach Morris came back. So, like, the whole crew is out there talking about meme stocks. Now, do you think this means there's any bigger story for the market here, or was this just kind of a one and done shot?
They had 2 days. All these guys came out. I think they played the entire market, to be honest, because we started talking about GME literally, 2 weeks ago when there was crazy options going on or going off at 12. And then when the stock was like 18, and then the whole world got loud when it had that huge gap up into the 60s. And I don't know if everyone who's watching, that was the top. AMC came out with huge volume at 3.5. By the time everyone said, hey, memes are back, the next day was a short-term top. The real story is how awesome the stock market's been, the sector rotation, the momentum, the 8-day moving average, the tier systems, all the things that we work on that have made us a living and tried to keep us moving forward. That's the story. The meme stocks were 2 days, and most people got trapped because they came late.
Okay, so I think that leads us perfectly into sort of the broader market discussion. So yesterday, so there was a big theme in April. Was on April 19th. You said blood on the street is back. It's time to leg back into the market, and you just closed it out yesterday. Something about 300 SPX handles. Do you think we're at a short-term top?
You know what? I don't. We can go to 5,400 in the next few weeks. I have a discipline. Okay, I have a process. I have 9 different accounts that I maneuver over the course of my being as Scott Redler. One of them is the Blood in the Street account that only gets used when we have a corrective phase. I only started when we are 5% or more off the highs. I've only been able to go to 3 tiers within the last, since 2018. It's 6 years. In 6 years, I've put it to work 16 times. It's 16 for 16. So I love this account because usually when everyone's like, oh, we're going down, we're selling, go hide in a bunker. That's when, if you have an intermediate and a long-term account, that's when you start putting money to work for alpha. And if you go here, and Michael, if you put on the chart, okay, of the S&P, which I have right here, I documented and I try
Scott,
and let everyone.
you need to hit the present button.
I need to do it? Okay. I thought you were going to do it for me, but I could do it. I'm learning. Red Dog is learning. Okay. So let's go to here. So listen, right here, 49.53. That was the day. That was the day actually. That was the day I actually tweeted a Portnoy and said, "Hey, I haven't seen you in a few weeks. If you want to be a buyer of the SPYs below 494, it's probably a good buy." At the same time, I'm looking to do my blood in the street account, and there was a lot of banter that day. But anyway, this was the buy, and yesterday, because the way it's figured out. So I'm going to give. By the way, I'm not going to talk about the blood in the street account for weeks or months, because chances are we're not going to be 5% off the highs for a while. Maybe over the summer before we need to get a rate cut. But bottom line is we went 5.5% off the highs right into here. I put tier 1 to work. The way I do it is usually I put one tier to work at 5% or more, and then I put more tiers, only another 4 or 5% lower. It didn't happen. And then when I take it off at all-time highs. So I patiently waited until yesterday. Okay, and that was 5,300. So that's 40. That's 300 plus handles. Actually, my wife calls. She waits on hold with Bright House for literally 20 minutes. The service there kind of is sugar honey iced tea. But anyway, so we were able to buy at the end of the day on the lows and sell yesterday. And from now, typically when we do buy it, though, if you remember, Michael, that's when we're buying SPY calls. That's when the market had an oscillator of minus 65. So typically when I buy the blood in the street account, you actively for a living can make really good money. And I remember we were buying the SPY calls and getting put to work here, and you had your first little move up. Then we made a higher low, a higher high, and then actively this was your day that the active bulls took full control, but that's a whole different time frame. But for me, yesterday was the day. As you can see right now, actually, it looks like we're putting a little bit of a topping tail. This is 254 on a Thursday. Here's your 8-day. Here's the prior high. So this was a better day to sell than to me to buy. But I don't think that just because I got rid of the blood in the street account, which is one account, it means we're at a short sum top. It means we're a little bit overbought. I had the luxury of us closing on the highs, getting a good print, and now she's back in a fixed rider. And I don't know when the next time that's going to go to work, but again, 16 for 16. It's going to be put to work another time. We do get corrective phases, but right now we're still in a very constructive environment for higher prices, and I'm trying to be actively long, but I'm massaging and using my tier system. For my long-term account, listen, I'm not queued in my 401k, in my 529, my 403b. Those are every single month. I'm 51. I cannot do anything different there till I'm 59. So that's 8 more years of every single month going in, and I can go longer than that. The blood in the street, I can't contribute. I just try and maneuver it, carve out 5% to 12% a few times over the course of every year or so, and it's been working really well. And hopefully I helped add value to you guys, because I got a lot of grief that day. Everyone's like, "Oh, you're a perma bull." I'm like, "No, I'm not." But anytime we pull back 5% off the highs historically, it's a good buy. If we go back more, I'll do more. And here we are at all-time highs.
Okay, Scott. So you've been very active in the semis. NVIDIA. Well, you added NVIDIA to power plays on May 3rd, along with Google, Apple, Amazon. You've also been playing AMD and SMCI. So what's been going on with our friends, the semis?
Well, those are the leaders. That's a whole different time frame. Those are the active market leaders that have given me clues on whether or not to put more risk on or take it off. And NVIDIA has been the poster child of risk and the future, and it got very, very tight. Like if you look here at NVIDIA, I think we put this on with power plays, right somewhere around here. Okay.
886.
886
on May 3rd.
There you go. That's the date. Why did I do that? Because if you look at the chart here, you had a descending trend line. It gapped above. We had a gap pivot to trade against. I'm like, this was the day. I think that was the day that we had the Fed, right? And the day the Fed was a tiny bit more dovish. They talked about no rate hikes, maybe 1 or 2 cuts, and that was when we put on 4 or 5 of the best acting stocks for those who want to be told what to do, right? Mike, power plays are a product we have where we tell you what to do versus the level where it can go. That's what power plays are. There are a lot of people out there that just want to be told what to do. My wife doesn't want to be told what to do. I don't like to be told what to do, but there are people in the market that have jobs that want to be told what to do. And on that day, you go back to NVIDIA. I said, we're going to buy it here because this is the leader. And I think we took off half today, not because I don't think it could take out 974, but because it had a pre-earnings run. Earnings are on Wednesday. We don't take stock into earnings. We do options, but that was a nice trade. As far as yesterday is concerned, if you remember in the 6:30 club yesterday, and obviously in Red Laurel Access where I put all my notes and charts, I talked about the downtrend that was breaking in AMD because we talk about groups, right? We like to, talk about friends and groups. And bottom line is here was your top in AMD. And then we talked about how you had AMD post earnings was a spot. And then it made a higher low with a red dog reversal. What's a red dog reversal? Well, went below 150.40, came back above it. And this was the focus yesterday. And now you're 3 days higher. Very frisky trade. I think a lot of people made a lot of money. I did not put on AMD because I wasn't in the office yesterday. I had 2 sets of options on for this week, which were doubles and triples. And now I'm trying to think about what I'm going to do for next week. So you're not going to want to miss that. Oh, I whispered. We don't want to be the whisperer. Remember who's that guy? Just kidding, Michael.
I don't get it. I think I missed the joke.
The whisperer, the guy that has a press conference and he whispers into the microphone. No, forget it.
I don't
Everyone
know.
else knows.
Okay, all right, let me ask you a related question. I'm gonna throw a random question at Scott. The whole concept of whisper numbers for earnings, especially because we have NVIDIA is the biggest one of the season. Do you think are whisper numbers a real thing?
100%. Usually you have estimates, and depending on, we always talk about like going into earnings season, you have to know where your stock came from, where it is, what the expectations are. Is it need to be better than feared, right? Tesla and Apple, all it had to do is be better than feared, and they had nice moves. We did really well there. Then you had, Meta and Netflix that were really strong. They were whispers higher, and they were good numbers, but they weren't enough. So whisper numbers are real. It's everyone talking about, what really the street wants versus the consensus. And usually the whisper number is on a very, very strong stock that's heading into a report. So sometimes you beat consensus, but you don't beat the whisper number, and it goes lower. And like, why did it go? It beat the street because there was a whisper number higher. And if you look in the video, excuse my little, gulp there, there's a lot of whisper numbers, which we're not going to get into. In order for this to take out 974, as it's very close to an all-time high, this type of name is going to need to crush the whisper, okay, where it's priced for perfection. It's going to need to beat, raise, and do a split if you think you're going to make money on options. So as on what the earnings are on Wednesday, on Tuesday, we'll revisit. I'm going to buy a little bit of options if we happen to move lower. I already did it a little bit today because I sold the 950 calls for $30. You bought them at 8. I sold, no, that was the 925s. The 950s were 3. I sold them for 10. So I'm starting to buy the thousands now into next week. So if we do pull back, I could buy a dip. If we push towards 974 prior, then I can create a call spread. But I'm going to have some kind of long strategy into the print because I do have a little FOMO here, Michael. We're not supposed to have FOMO as professionals, but I have a little FOMO just in case this channel since March wants to resolve to the upside, and I'll figure out how to do it, but I'll do it strategically.
Okay, all right. So professionals are not supposed to have FOMO. So what is actually going on in your head? What are you actually feeling?
I participated prior to the earnings, but when you have a binary event and NVIDIA, if they beat, raise, and give a split, it could be up 150 points. And I know it might happen fast, and I might not be able to trade it after hours, but I will if it trades through 974 because that's your big pivot. So I want to make sure I'm involved in some way where if we have this blockbuster move, I want to do it with a calculated plan. So I do have a little FOMO that NVIDIA, which has probably been my number one stock in the last 2 years, has a big move without me. So I'm going to do it in a way that makes sense. Granted, it was great to play along like NVIDIA. By the way, look at this chart. You have your low, a higher low, a higher low, a higher low. So this has been an unbelievable trend where it's given you really nice gains prior to the binary event. So I have a little less FOMO than if it wasn't there, but I'm going to have something into the print, but my risk will be defined, and we'll see how it goes.
Oh, okay, but I'm talking about actually, like, are you feeling like butterflies? Like, are you basically, I don't know, is schmuck insurance the right phrase for this? Basically, are you paying to avoid that feeling of
Missing out.
yeah,
Yeah,
like
if it
is
was
it?
up 150 points, like Red Dog, why aren't you in this? I'm like, you're right. I should be in it. So yeah. First of all, my crowd wants me to be in everything. I have the Alpha team, I have Red All Access, I have 200,000 Twitter followers, and they think I need to be in everything every minute, every moment, and that's not true. Sometimes I undertrade, sometimes I am calculated. The bottom line is you don't need to be in every move, and you don't need schmuck insurance. Like sometimes there are earnings plays. I'm like, this just not as a good setup. You could be right and lose money. Doesn't that suck? When you're right and you lose money, like NVIDIA could go out at 950 and open up at 1,000, be up 50 points, and you could lose money in your calls. So you have to do it right. So just the less type of schmuck insurance you have, which that's not a really nice word. But anyway, the less you'll be chasing stuff. So as long as it's strategic and it's calculated, it makes sense. So we'll see what happens here the next few days. Thank goodness it gave us a nice move off of the lows that we're not feeling like we're going to miss something, but it definitely is a nice setup to the upside. So, you just got to do it in a way where your risk is defined into a binary event and just take a little bit of the pressure off. Sometimes you feel pressure, right? Pressure to be in things that you don't want to be like, hey, well, everyone's, the bandwagon's loud playing big music, but if you're not on it, you're not having fun. Just know if that bandwagon is full and it hits a bump, the last 10 people on the damn bandwagon is going to fall off. It's another bump, then half of it goes, and then typically too many people having too good of a time, and that bandwagon gets cleared out before it's got to start again. I don't think this is it for NVIDIA. I personally think you could see 1,100 plus. Not saying if it's not this earnings report, it might be next earnings report. So we'll see. I'll have some kind of plan into it, but we've had a good run prior.
Okay, would you rather see it pull back a little bit from here, just to kind of like cools people's jets a little bit?
Like into the print? We don't have that much time. It is Thursday, I guess. If we were to pull back towards 922-ish, which is where it got above, which was the buy point yesterday, I would say, hey, I will. Then all of a sudden it's $80 or off 1,000 and more points off 974. There's more room to get there and go. That would be fine. But the funny thing is, some people are like, hey, would you rather it work or would you rather it not work? Because after the earnings, sometimes once the binary event is done, you can make more money. I'll give you a case in point. So Baidu, I took options into Baidu because I thought, hey, the AI of China, the search of China, all these pieces of news, and I took options into it today, and I had to sell them because they didn't work. Okay, I had the 115s, thinking, hey, I think if Baidu gets above 113, you could see 125. I bought the options for $1.40-ish, and I figured, hey, I could make a lot of money if they beat and they raise, and it looked good, but I'm like, I don't have enough time, so I took them off, and I lost money in those calls for Friday. But you could have made that much more money into this down move where it did a red dog reversal, went below 107, reclaimed it. So into this down move, I'm like, you know what? BABA, I connected the dots, just filled its earnings gap. Citron was all over it. I'm like, let me buy the 113s for next Friday because China is acting better, and I'm making more on the new calls today than the calls I took for the earnings event because it still might be a zero as of tomorrow, but the 113s are in the money, and I traded it. So sometimes you take small options into a binary event to take the FOMO away, but after the event, there's more money to be made because you have market discovery and you could actually put more to work because there's no news releases that are going to, change the complexion. So at this point, I think that this Baidu looks very interesting. Nice reversal. At some point in the next few weeks, I do think it sees 125. And if you look at the weekly chart, it just broke the downtrend. Now the earnings out of the way. You have a little bit of a bull flag. Chances are, I think Baidu is a good play in the weeks ahead, and I'm there for next week.
Okay, Scott, let's take a little bit of a detour. So I've noticed, because I know you're interested in health, and this does play into stock market stuff, the level of conversation about these weight loss drugs, because I know you follow Lilly, NVO has Ozempic, and I am seeing an explosion out in the regular world of conversation about these drugs. Like huge podcasts, they're doing episodes like around Ozempic. So I was wondering if you could pull up Lilly for us and tell us what you're seeing there.
Well, I'll say out of all my options today, Lilly is my biggest loser, which is not a big deal because at this point, there's a way to accumulate in a channel and there's ways to buy it when it breaks above the channel. So for me, I kind of think that Lilly is going to break above this 800 at some point. So I just got to make sure I don't buy too much. So, this was here in February. It was at 800. It was at 800 in March. And here we are. At some point, I think it takes out 800. And the measured move is at least 900 or more. So what I started to do is I started to buy these 810 calls for June something or other. But you could probably put it up there. I bought it down here. And then I added a little bit today because I want to be in some options. And then when it triggers and gets above 800, that's when I'll buy the stock because that's when the trade turns on. So for now, it's halfway in the middle of this big channel. So it's showing, good, nice strength. So I think you have to give it enough time. At some point soon, it might get above and stay above. But for now, I've been buying some $810 calls. I think, which ones do I have? The June something, June 16th?
June 14th.
So I have a month. For Lilly to get above 800. If it does, I think it goes to 900 fast. If you remember power plays, Michael, we had this to start the year. This was our best power play to start right here when it took out 587. This was another channel. Then it took out 629, but it was a little tricky there before going. So sometimes this is tricky. So, tricky names, I sometimes just go with options because I can give it less room. My risk is defined. I do think at some point this is going to take out 787, 800, and I'll have some options. And if it gets above it, I'll add to it. Everyone on Alpha Team knows when I'm in options, I'm incubating the trade. When I'm in options and the stock, that means my concept turned into a trigger trade. And I'm usually in both. And that means it's on the A list and it's in motion.
Okay. All right. I'm glad you brought this up because if you're incubating and you're waiting for stuff to happen with options, you have to deal with time decay. So why not incubate in the stock?
Because sometimes I'll overtrade it. Sometimes I'll get too much size, and sometimes it'll just play with my emotions prior to it. So what I'd like to do is I'd rather just do my risk is premium paid. So if I put if I buy 10 options at $10, I know what I'm risking. If I buy 20, I know what I'm risking. If I buy 1,000 shares and all of a sudden it starts to falter and come down, I have to overly focus on it, and it takes away from other things that are happening. So I do options because risk is premium paid. I'm knowing what I'm paying to watch. I'm paying to say, hey, I'm involved in Lilly. It's a play I think could work. It keeps me engaged. So when it does trigger, I'm there. And if it doesn't trigger, this range could go on for 2 more months. I'll lose my premium, but at least it won't overly take me away from things that are moving and working. It just didn't work, and my idea, wasn't ready yet. If you remember with NVDA on Monday, Tuesday, people thought I was crazy. Like, oh, this stock is horrible. I'm like, well, it's just flagging. It's just not ready. And then when it was ready, if you went after it yesterday in NVIDIA, triggered above 922, today it hit 958. You played it those other days when it was in the range, not ready, you probably nickel and dimed yourself to death and overtraded and lost thousands of dollars. So for now, for me, for Lilly, I'm in some, so it pays me to watch it. And if it breaks above 800 with authority, chances are I'll be in the stock also. And hopefully I'll make money on both sides, and we'll be high-fiving and having a few more IPAs and, paying some bills so we could move on with life.
Okay. All right. So this week we had some big economic numbers. We had the PPI, the CPI. Do you think anything's changed with the Fed? Do you think these numbers really matter that much?
Oh, yeah. We talked about we needed an inline CPI to take out the highs of the year. If you look at the SPYs real quickly, let's go to the SPYs. Yesterday, I did a whole big video on saying, hey, if the CPI behaves because we're in a strong trend, chances are we could take out 524.61, which was the pivot you had to be prepared with, and see a move. And it did it really nicely, and we hit a high of 531. So the market wants to see certain things at certain times. Right now, earlier this week, we did a video on what's driving the market higher. It's Goldilocks. It's softer reports showing inflation is moving at least a little bit lower, not to where the Fed's mandate is. Who the hell really knows where that is? They say 2%. It's probably higher, whatever. But you want to see economic growth still good. So the Goldilocks narrative is in control. But if all of a sudden we're making highs and the data starts getting weaker and companies start pre-announcing and more layoffs happen, the narrative of softer news to have the equities go higher will turn into the recession chorus, and then we go lower. So the market gravitates towards narratives, or the media makes narratives around price action. And as of right now, the market wants 2 rate cuts, one in September. If inflation starts getting too hot, if the market continues, chances are it's not going to happen. And then we're going to have to pull in so the market can correct that narrative. That's the way it goes. For now, lots of participation. Leaders are working. Markets are trending. We'll see how far this one goes. In my head, I think this is, if I were to give you, Michael, Red Dog's prediction. Okay, we broke above 52.64. The trend is intact. What might happen is we might make some kind of peak in the next 4 weeks. Could be 53.80, could be 54.50, could be 5,500. But then inflation's going to get hot. The wealth effect's going to happen. Sentiment's going to be through the roof. And we're going to have to correct, because then the rates are going to start rising. We're going to have to correct somewhere within the summer, like we did into, April, to move lower. So this way sentiment gets washed out and we could have the hopes of a rate cut in September. So I would think that we could continue this. Obviously, we have to get through NVIDIA next week for a bunch of weeks, but then we will hit some kind of peak, in my humble opinion, which I'm going to trade day to day, week by week in the next 4 weeks. And we're going to have to pull in a bunch to get that September hike. Because if we're at 5,500 in the end of August at all-time highs, there's no September hike. Rates start going up, things start, the algos go nuts, and that's that. I said that before, so I'll say it again. The Fed looks at markets also, besides just, their mandates. That's what I've learned through 30-something years of trading. But for now, I don't even remember what the question you asked me was. But
it was basically, did anything change? And you meant no September cut, right?
No, September cut's on the table. But if we continue for the next 4 weeks trending the way we're trending, all of a sudden rates are going to go higher. Inflation is going to look sticky. The wealth effect, because everyone who's in the market is going to feel good. They're going to start paying for things, and the data is going to start going up, and then the algos are going to sell. So I could see us peaking in the next 4 weeks, somewhere around there, and we're going to have to come in order to get that September rate cut. Because if we keep going, September rate cut's going to be off the table, and we might have no cuts. The market could absorb it because the economy's not great. But, at this point, the narrative is Goldilocks. Every few months, the narrative changes, and that's what they want. Sometimes they want strong. When it looks like we're in a recession, they want strong reports because we're not, or they think we're in. And sometimes if we're too hot, they want weaker. And then you just have to know which way the algos are programmed so you can know how to react if you actively trade for a living.
Okay, so ideal situation is nothing too good happens and nothing too bad happens, correct?
Right, and we get follow through without predatory action, where if a stock closes strong, it opens up. If a stock closes weak, it opens down. That's what you want. It's called follow through. Traders need follow through. We want higher lows and higher highs, and if we make a peak, then we want lower highs and lower lows until we find another pivot. So as long as things are trading in a way that makes it conducive with a sequence, that's what we want. If long term, bull markets win. Hopefully you're not 78 years old or 80 or something like that, and you're like, wow, I'm at my all-time highs. What do I do? If you're 80 years old, maybe you reduce some of your equity holdings into this spot just in case something doesn't end well in the next 6 months. If you're 51 like me, or Mike, I think you're like 40-something, it doesn't really matter long term. But if you trade actively, use your tier system. We're a little overbought, Don't be chasing. Know what's coming out earnings wise. Know what the narrative is. Know what you're willing to do. Don't be chasing meme stocks when every major guy in the world comes out of the woodworks and starts talking smack like they did on Wednesday, which created a short-term top for AMC and GME. Don't listen to the noise out there. If you hear something 5 times an hour, chances are you missed it. If you don't hear something and things are acting well, you're in there before the masses. And that's what professional traders do. We get in there before the masses. By that point, you're feeding it to all of them because it's too late.
Okay, guys. Before we wrap up, we encourage you, go to t3live.com/show. You can get Scott's free ebook. Super simple gap trading. A lot of his biggest wins this year have come off these great post-earnings gaps. The link is, if you're watching on Twitter, the link is in the tweet. If you're on Facebook, LinkedIn, or YouTube, the link is down in the description. So, Scott, what should people... Sorry, go on, Scott.
Just on that, I just want to show something because, trade stocks come in and out of focus based on the technicals and based on certain events. Like you just talked about the simple gaps, right? Pro earnings gaps. A lot of people a bunch of years ago, like, hey, Red Dog, you're the Apple trader. You don't play Apple anymore, because it hasn't worked. Finally, if you look at the chart of Apple, which we posted a bunch, you look here, okay, I tried to go over this a bunch of times. You had this, this better than feared report, right? This wasn't trading up here. It was trading down there. We made good money on earnings, with an option strategy because we take only options into earnings, not stock. And then you had this pivot here of 180.40. And from there, you could have been a buyer and just, it was a beautiful swing trade. That's why we put it on as a power play. There's power. It's a big gap. If it would have filled this gap, no power. If it holds the gap, power. So now here you are 190. So that's $9, $10 in Apple, which is a great stock to own. Get a dividend, there's a buy, whatever it is. So bottom line is these type of strategies work if you're active. Plus we had options. So what did I do today? I bought a little 195 calls, for the Friday before the AI, what's it called, the event, WDC, WWDC, whatever you want to call it. But so far, this strategy worked. I could show you so many trades that if it holds a pro earnings gap, it trades in the direction. If it opens up and then fills it, it's not that strong. It's a very simple strategy that you could use to make money, and it worked for Apple. It'll work for 20 more things in the next 3 to 6 months. So that's why you should download that ebook, because it shows you lots of different types of examples of this working. And it worked. Apple, the best company, I think, in the world. And by the way, nobody's talking about what I told Tim Cook he should do. Oh, that's me and Cadence. You see me and Cadence? They're going to make a flip phone. Okay, this is what I think. They're going to make a flip phone that Samsung has, better and thinner, and that's going to cause a freaking huge replacement cycle because you're going to need new, plugins for batteries. You need a new everything. I saw the Samsung. You open it up, there's no crease. You could watch movies in bed. You could do your business, and it's like half the size of an iPad, and it could close up, be the same size as this instead of iPhone, 170,000. And I think that's going to happen. But anyway, right now, technically, it looks like a little bit extended, a little bit of a short-term top. I have left shares. Let's see if it comes in a little bit. Then I do think at some point, this 198, 199 for Apple will not be a double top. It'll be taken out. It's just a matter if it's going to be in the next month or the next 4 months. But right now, we have a really nice active sequence that's been paying most of us to buy dips and massage it. Massage it. What's a massage? You know what massage is?
I know massage. I don't know that other word.
Yeah, me neither. No one knows that one.
Okay. All right, Scott, I'm going to ask you. All right. I just thought of kind of an off-the-wall question. All right. Let's say I can give you $1 million worth of any stock right now.
Right now?
But you have to hold it for 5 years. What stock would it be?
Ooh. So, the funny thing is you have to play your risk. What do you want as a steady Eddie? What do you want as that has a lot of upside? That's a tricky question. You could say, 5 years from now, Apple will be a lot higher, NVDA will be a lot higher, but doesn't mean percentage wise it won't be a lot higher than a mid cap or a small cap. But again, what's your risk? I would say give me the SPYs.
Yeah, all right.
I know that's going to be higher
No,
5 years from now. I'll take the SPYs.
You can, your risk is nothing. Remember, because I'm just giving it to you, and we're going to pretend the IRS doesn't exist. I could literally have $1 million. So you would take the SPYs?
Yeah, that's a cop out. That's not really a great. Can I answer that next week?
Oh, come on, Scott.
Oh, right now, natural gas, UNG.
Wow, you see, that I like. That now that is an answer. And I'm going to set a reminder in my phone 5 years from now. I'm going to call Scott. We're going to see where natural gas is 5 years from now.
Sounds good. 3 months ago, we talked about it being a great energy source for AI. A lot of guys made really good money in the stock and the options, and it's still dirt cheap. 5 years from now, I think natural gas will be a lot higher than it is.
Okay, all right. I think that is a good note to end on. Everybody, thank you for joining us. We should be back next Friday. In the meantime, if you want to find great stock picks like Scott, go to t3live.com/show and download the ebook. Scott, you're back in #1 status. You're no longer my arch nemesis. Scott is my best friend again. I'm happy to announce. Everybody, thank you for joining us. We'll be back here next Friday. Have a great weekend.
Yes, thanks for tuning in, and I'll see you guys in the morning. Later, guys.